You ever just wanted to buy a dividend stock but didn't want to wait years for it to start paying off? Well, that's where MPW, Medical Properties Trust, comes into play. They boast a starting dividend yield of 6.3%. I just had to go in and top off at 100 shares in my portfolio this past week. I now own enough to start doing covered calls, and I'm getting paid over $100 a year from this company for just existing. Now, these aren't your father's Mickey Mouse dividends. This is cold, hard cash. Let's go over a few reasons why MPW is a screaming buy, especially after they just announced earnings. We'll get into that as soon as you touch that like button, and make sure you're subscribed to the channel because I make videos about high-yielding dividend stocks all the time. Okay, now that you've done that, let me show you this. 440. That's the number of properties MPW has under their belts. They provide different types of healthcare facilities for patients in 10 different countries. They have 46,000 beds all across the world, and their portfolio value is estimated to be around $22 billion. We've just seen how important it is to have healthcare facilities all the time. Unfortunately, healthcare is going to be a problem that needs to be dealt with every single day. This is a sector governments and people are going to continue pumping billions of dollars into. And while there's many expenses and problems with healthcare, paying that monthly rent bill is always going to be a top priority. And MPW property types include general acute hospitals, they include behavioral health, inpatient rehab centers, long-term care, and freestanding ER/urgent care facilities. With all these different building types, they actually brought in $410 million in revenue this past quarter. That was up from $362 million a year ago. Their portfolio is also very well diversified, their tenants are strong, their balance sheet looks good. The company also brings in money from financing leases of other healthcare companies and also has joint real estate venture projects. Now hospitals, they get reimbursed for Medicare costs, and those always exceed inflation. Yeah, healthcare, it really is great when you're on the making money side of the business. I know you all want to know about those big dividends. So as mentioned before, this company has a starting dividend yield of 6.3%. Now typically I would be afraid if a company had a recent drop in share price, and that's exactly what happened with Medical Properties Trust. They recently went through a little slump in share price, and that's what's caused their dividend yield to become so high. But apparently the reason for the drop was, wait for it, fake news. That's right, a Wall Street Journal article said that MPW's largest tenant was about to declare for bankruptcy. That obviously would have been a huge impact for the company to lose all of that rental income, and then other news outlets, they started to run with this rumor as well. They even went as far as saying MPW was bailing out these tenants by giving the tenant a more favorable rate than the market value. During their earnings call, their CEO vehemently dismissed these claims. After all, as a business, the first goal is to make money. The second rule is, don't forget rule number 1. They explained that the loan that they gave to Steward Healthcare, their largest tenant, was actually for private equity, and the sole purpose behind this was to get a strong return from the loan. They would get 4% interest in cash, plus any type of capital appreciation in the equity. Medical Properties Trust also dismissed that Steward couldn't pay its rent. They actually showed that Steward had 2.8x coverage of the rent, and they could generate that with their own business operations, with their general acute facilities. Now that you know I am not concerned about the fall in share price, in fact, I should be thanking the fake news for letting me get a discount. Let's take a look at that dividend growth over the years. They've actually been paying dividends every quarter since 2005. This includes during the 2008 real estate crash. They've also increased their dividend each of the past 9 years, though lately it's just been a penny raise. But when your starting yield is as strong as MPW's is, I honestly don't mind. And it's not just the dividends that have been great with MPW, they've actually beaten the S&P 500 the past 10 years, returning 14% compared to the S&P 500's 13.5% annually. So not only does this company give out amazing dividends, they also beat the market. Best of both worlds. If you're worried about inflation, because who isn't these days? MPW is triple net lease, meaning tenants are responsible for maintenance, they're responsible for insurance, they're responsible for all these ridiculous property taxes, and they also have built-in inflation escalators for most of their leases. To me, this was a no-brainer buy. I just went in and bought 20 more shares, and now I own 100.47 shares. That 0.47 is definitely very important, and I had to include it. I now make over $117 every year for just being a shareholder of Medical Properties Trust. I'll let the good old folks at MPW deal with the tenants, I'll let them deal with managing properties, and just have them send me checks. They can also deal with the fake news because I hate that as well. Another advantage to owning 100 shares is now I can do covered calls. My average cost is $18, so as long as I just pick a strike price above that, I'll make money and get paid premiums for really doing no extra work. It's like making your own dividend payments. I make videos like this all the time, so make sure you're subscribed and make sure you leave a like and comment your favorite REIT comments below. Who knows, I might just make another video about it. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.